You know that cinematic moment when the underdog walks into the stadium, the crowd goes silent, and you can feel destiny in the oxygen? That's the emotional core of every comeback story investors adore. But markets aren't movie theaters. They don't buy the soundtrack, they buy receipts. And for Supermicro Computer, SMCI, the last year was less slow clap and more suspense thriller. Auditors resigned. Nasdaq doors threatened to close. Investors dialed the emergency number on their portfolios. Now the clouds are clearing, and the question on every long-term shareholder's lips is, can this thing actually soar? Market snapshot, price action, tier lines, and the PE itch. Let's start with the cold facts. SMCI is trading around $29.91 after a tiny slide, has fallen roughly 12.1% in the last month, and about 8.3% in the last year. That performance always wakes up the long-term holder's inner accountant. When your position's been carved down, the first thing many investors do is go check the price-to-earnings ratio, because PE is shorthand for how the market values future profits versus today's share price. Why does PE matter right now? Because when a stock underperforms, two mental processes kick in. The optimistic investor thinks, maybe the market is pricing in too much doom. If fundamentals improve, the PE should re-rate upward, and boom, upside. The conservative investor thinks, if earnings are shaky, maybe the current PE is too high for the risk. Time to trim. So yes, a slide like this makes shareholders stare at the PE like it's a crystal ball. But a PE is only as useful as the earnings it expects. And because the biggest story for SMCI is growth potential tied to Nvidia and the AI server boom, the real question is not the PE today, it's whether earnings will get large and reliable enough for the PE to be forgiven and then celebrated. The ignition, SMCI expands to support Nvidia's Vera Rubin and Rubin AI platforms. Here's the mic drop. Supermicro officially confirmed it has expanded manufacturing capacity to support Nvidia's Vera Rubin and Rubin AI platforms. If you're not a chip geek, translate that sentence like this: SMCI can now mass-produce the server builds that power the bleeding-edge AI brains the world is talking about. That's the signal investors wanted, and when you get official confirmation that your name is on the supply chain list for one of the hottest platforms in AI, you don't get subtle applause. You get investor radar locks. Why this matters so much: Nvidia is the kingpin of modern AI compute. Its platforms are the standard many hyperscalers choose. Being certified to build and ship those systems means SMCI is not some optional accessory, it's a core supplier. Volume plus repeatability equals revenue. Hyperscalers buy racks by the dozens, then by the hundreds. Once a supply channel is approved, orders can scale fast. Operational scale is binary, either you can reliably build at hyperscaler pace or you can't. That confirmation tells the market, SMCI says it can. Imagine Apple launched a new iPhone and said, we want 10,000 of these funky modular batteries overnight. If your factory can suddenly make those batteries to Apple spec, you become a business that matters to Apple. That's SMC and Nvidia right now. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The accounting cloud lifts, why trust rebuild translates into runway. The second, and perhaps even more emotional, part of SMCI's story is the lift of the accounting cloud. For months the firm lived under a fog: auditor resignations, delayed filings, regulatory attention. Those are the kinds of headlines that freeze capital markets in place. You don't just lose stock price, you lose credibility. Factories can be humming, but if investors don't trust the books, they won't fund growth. So what changed? Regained Nasdaq compliance, February 2025. That's a red-letter milestone. It means SMCI brought its reporting back in line with listing rules. The fear of a delisting is a death knell for many companies. removing that threat is like removing a weight from the stock's back. BDO USA appointed as independent auditor. Bringing in a reputable auditor reads like a public pledge: we want clean books and independent verification. It's not sexy, but it matters a lot. Special committee concluded no evidence of management fraud. That's the PR equivalent of a full-body MRI that comes back clear. Investors breathe a sigh of relief. What does that do to the story? It turns speculation into analysis. When accounting uncertainty vanishes, investors start to look at operations again, shipments, margins, capacity, and not trust remediation. And in a sector where future growth expectations are massive, restoring trust unlocks one of the main plugs to demand: the capital markets. It's like a celebrity who's been tabloid fodder for months suddenly going on Oprah and having an auditor read their bank statement. Reputation heals. Doors open. Manufacturing ramp-up in 2026. Why Ready to Scale is a growth engine. Now let's zoom into operations. The conversations that used to be full of "will they survive?" are turning into questions like how fast can they ramp, and can supply chain keep up? That's a huge narrative swing. The company isn't just promising to make gear, it's showing it has expanded capacity for very specific, very high-demand NVIDIA platforms. Why a manufacturing ramp matters: speed to revenue. If you take on big hyperscaler orders, you need factories that can meet delivery windows. Miss those windows and you risk cancellations or lost share. SMCI's expansion signals it intends to meet those windows. Unit economics: at low volume, server builds can be expensive and margins thin. At scale, the fixed costs dilute and per-unit margins improve if pricing holds. Imagine building one Lamborghini. It's costly. Now build 1,000 Lamborghinis with a line that's tuned. Costs drop. Customer stickiness: once a hyperscaler designs around your platform and integrates it into deployment pipelines, they don't switch overnight. That converts into multi-quarter or multi-year pull-through that could possibly hit $200 in coming decades. Think of this like a bakery that used to hand-bake artisan loaves. Now they've installed an industrial oven that can bake 10x loaves without burning the edges. Local cafes now buy weekly subscriptions instead of ad hoc one-offs. The safety check: bankruptcy risk faded, but not erased. Before anyone starts penciling in a 5x return, there's the safety check: are we actually out of the woods? The simplest answer: the bankruptcy or delisting risk has materially faded, but risk is never zero in markets. Here's why that fear has less bite: NASDAQ compliance regained, February 2025. That's the #1 de-escalator for immediate existential risk. No delisting specter means more institutional investors can hold the stock without breaking policy. New auditor, BDO USA, in place. Independent verification reduces the chance of unexpected restatements or surprise accounting charges. Special committee findings: with an independent probe clearing management of fraud, legal tail risks, one of the most terrifying unknowns, have shrunk. Imagine a ship that was taking on water. The crew patched the hull, filed inspection reports, and the Coast Guard said, "Looks good." You're not guaranteed smooth sailing forever, but you're not headed for the bottom tomorrow. So the safety check is green enough that investors can now look at potential upside without paying insurance premiums against bankruptcy. That matters because capital that had been parked in safer places can filter back in. How the confirmation plus cleanup could actually make SMCI soar: the blueprint for a breakout. Okay, let's flip from drama into the rocket science part. How could all this translate into a stock that soars? Revenue acceleration from Vera Rubin/Rubin AI demand. NVIDIA's platforms are the engines of modern generative AI. If SMCI becomes one of the mass-build suppliers for these platforms, it stands to gain enormous order volumes. Think multi-billion-dollar waves rather than single ships. Institutional buyers often place massive orders once a production channel satisfies validation and security requirements. Once SMCI's line is in the ordering system, repeat orders follow. Imagine being selected as the contractor to build all the stages for a world tour. One tour, many stadiums, repeated ticket demand. That's revenue compounding. Margins improve with scale and higher value configurations. Yes, margins were compressed earlier. But higher volume sales, reduced per unit overhead, and potential pull-through of higher margin service and software, system integration, warranties, fast turn upgrades, can restore and even widen margins. The math is simple. A 1 to 2% margin improvement on tens of billions of revenue is enormous. That's the compounding engine for earnings per share. If you sell more cake slices at a marginally higher price and lower ingredient cost, profits grow faster than revenue, magic sugar. Multiple expansion via risk reduction and narrative shift. Markets pay bigger multiples to companies with clear growth trajectories and less governance risk. If SMCI continues clean filings, converts design wins into shipped governments, and shows improving margins, analysts will increase earnings forecasts, and the market will reward the stock with a higher P/E multiple. That's the classic valuation re-rate: same company, more trust, higher price. Imagine the same sports team wins a few games in a row and suddenly bookmakers shorten their odds. The perceived chance of a Cinderella run changes the valuation of every jersey. Ecosystem and software services add recurring revenue. As SMCI supplies more branded AI systems, it can increase after-sales services, rapid deployment, maintenance, cooling solutions, cloud composer tools. Recurring revenue from services is gold to investors. It smooths the revenue stream and creates higher margin follow-on opportunities. If SMCI packages hardware plus managed deployment and support, that's a more valuable sale. Selling a smartphone is nice. Selling a 3-year service plan and app platform creates a steady cash stream. Note this as well. Do you want peace at heart? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.